Hey, Carrie, headed for 10,000.
Yeah.
Who would have thought? Yeah. A few people did think that. There are a lot of people out there who are saying, told you so, this was going to the moon.
Yeah.
One interesting story regarding Bitcoin lately is what's happening with China. They actually tried to ban it is too strong a word, but they're trying to control it really aggressively via various kinds of capital controls. And the fact that it's going up while they're doing that kind of illustrates the point that it's hard to impose capital controls because borders are naturally porous and people with money are naturally clever. So they tend to get around whatever kind of capital control you're imposing. And, in China's case, they banned Bitcoin exchanges and made ICOs illegal. But at the same time, they're dealing with a credit bubble internally. And so they're creating a lot of new currency in order to prop up what are turning into zombie entities within the country. And that money is flowing into Bitcoin, because people still have internet accounts. And so they can still work with Bitcoin in ways in China. And so a lot of that money is flowing into Bitcoin and out of the country, but in the process, it's helping to boost the Bitcoin price. There are lessons on a lot of different levels here. One is that capital controls are just a bad idea. It's an admission of failure, and it eventually turns people against their government. Because if you have money, that's yours. In your own mind, you own your own money, right? Which is the way it should be. And if you want to move it from, Beijing into a Vancouver, British Columbia condo, that's your right to do that. And if the government tries to stop you from doing that, then all of a sudden the government is your enemy. And then you feel no problem whatsoever with evading the government's rules. The government basically creates a class of criminals by trying to impose controls on what people can do with their money or where they can move their money. And you're seeing that to an extent in China. And, we'll be seeing that all over the world in the next financial crisis because there aren't very many tools left. If you've already got negative interest rates and your economy dips into a recession, what do? A lot of the world is going to have to deal with that question pretty soon. And capital controls will be one of the answers. So what we'll be doing is, and this is really late stage credit bubble stuff. It happens over and over throughout history. Countries screw up their finances to the point where it's just not viable anymore. And then they try to control what people do with the money that they're terrified of and want to get out of. You see a lot of examples throughout history of, the death penalty being imposed on people who don't want to take the paper money that's being put out by the government. They demand gold or silver instead or whatever. And we're headed for maybe something not that draconian, but it's still going to feel really oppressive when governments start telling us that we can't move money overseas and we have to transact in the national currency that they're actively destroying. That's going to be the new normal next time around. And, China is a pretty good early example of that process, and it's not working for them. Money is still flowing out of the country. Because that's the logical thing to do if you have money within China is to diversify, buy some stuff in potentially more stable places. The same thing will happen in the U.S. pretty soon. And we'll be trying to store gold and silver in vaults in Switzerland or Hong Kong and open, assuming cryptocurrencies keep it together for the next few years, then we'll be trying to buy Bitcoin and store it somewhere else. These things will all be happening and governments will be responding to the perceived threat from these things. So it's going to be very messy. And there's nothing surprising about it. It's how finance has worked throughout history. Governments, when they're given free rein, overdo it, screw up their financial systems, and end up becoming financial dictatorships in order to keep it together at the end of the process. And we're headed for the end of the process. Based on any number that you want to point to, any macro number, we've never been this highly leveraged before. And historically, record levels of leverage lead to a period of turmoil.
Invariably, that is what happens. The government, of course, to keep all those bureaucrats employed, to keep everything going the way it's going, they wind up becoming very authoritarian, very aggressive. And we have soft authoritarianism here in the U.S., arguably soft. Not always, but usually soft in the U.S. But when they get more and more desperate to keep the Ponzi scheme going, what are they going to do then? What's the next? The currency controls and all of this stuff. And now with things like Bitcoin, well, maybe in China they'll go rounding people up. You think the day will come where they actually might be rounding people up in the United States for possession of Bitcoin, John?
Oh, can you imagine, Kerry, what that would do?
It's like taking away people's guns, right? I mean,
well, there's a long list of things that they could do based on what governments have done in the past. And some of them are silly and some of them are terrifying. And there's no way to know what we will do in the next crisis, because a lot of these decisions will be made by people who have limited information and are under a lot of pressure and are getting conflicting advice.
Don't forget the limited intelligence.
Can't know what they're going to do.
Limited intelligence too, you know.
High intelligence, but bad models. You know, you can't call people running the Fed stupid, but you can say they're misguided because they're operating under the guidance of models that, for instance, don't really include debt as a major factor in the predictions that the models spit out. And if you're not looking at the leverage that's accumulating in a financial system, then you don't have a true picture of what's happening. And the Keynesian models that today's Fed governors use don't really look at debt. You know, they just look at aggregate demand. In other words, how much stuff are we buying with borrowed money? And as long as that's going up, they're happy.
Yeah.
So, you know, these brilliant guys with Ivy League educations are absolutely baffled by today's world.
You know,
and that's because they're working with models that don't really incorporate reality.
Totally.
So, you know, they're behaving stupidly. So we can definitely call their behavior stupid, but they themselves are just smart but clueless people at the end of a long cycle. You know, the culture of which they're a part is largely over now, but they don't know it.
Yeah. Well, hey, here's a good one. A good time to insert a question from listener Keith. First off, love your work. 3-year listener. The cure is basically my using the old economy as a patient analogy. You and many others have been diagnosing, analyzing symptoms for a long time, but when do we begin working toward a cure? And he boils it down to one thing: removing the Federal Reserve and returning the power to issue money back to the people, alongside a return to the gold standard. I don't know if that's the cure or not, John, but in this case, the cure could easily kill the patient. You know, that's like giving them 2 IVs worth of chemo at one time to kill off the cancer, and the patient suffers major organ failure, you know? How do you do that?
Well, that's the nature of this kind of leverage. There's nothing you can do that doesn't create a crisis. So there is no fix. It has to work itself out via market processes. And those market processes will be incredibly painful, right? You know, there's just nothing that you can do about debt that is 400 or 500% of GDP. You know, you got to get it down to 100% of GDP. And the people who have the debt that's going to be wiped out are hurt one way or another. Oh, hey, Kerry, I need to digress for a second here.
Sure.
And make a correction from last time we talked.
Oh, yes. Yeah, I got that email too.
Yeah. I said some bad things about Russia that turned out to be based on really old data. And John Merko, one of your listeners, sent an email pointing it out. So I would just like to say that, Mr. Merko, you were right. I was wrong. I was using old information. You know, Russia's population is not plunging right now. It had been for the past 20 years, but it's stabilized in the last couple of years. And I said Russia doesn't really make anything besides oil, which is, it should have been Russia doesn't export many things besides oil.
Right.
They make arms and oil, and those are their two big export industries. But they make a lot of stuff internally that the people in Russia use. So they've got a more varied economy than I made it sound like it was. So sorry about that. I'll be more careful in the future.
Yeah,
with stats.
One thing we can say about Russia that is absolutely true, and to my knowledge, they haven't come to grasp with it, to come to terms with it yet. Well, there's two things. Alcoholism, rampant alcoholism. There's a reason why the national beverage there is vodka. Okay. Serious alcohol problem, much far worse than the U.S.'s, which is awful as well. Out of control addiction in the U.S. The other thing that's happening, which doesn't get followed much, is Siberia is being colonized by China. And more Chinese settling there and producing, which Russia doesn't really understand that its long-term interests lie more with the West than the East. But, there's such vast empty portions of the Russian subcontinent. It's almost a subcontinent, John, that colonization by China doesn't seem to be a threat now, but there will come a time when they're going to be stuck with it, and it's going to be a big problem for them.
Yeah, I mean, that's more of a longer term thing, but Russia is gigantic. If you look at a map, you see Moscow is way over on the western side. And that's still a hike from Western Europe. Germany and France always try to invade those guys. And then they realize that the place is absolutely vast. They get to a couple of major cities and realize they've got a lot more to go. And then winter hits, So Russia is a unique piece of land that has a really interesting future if global temperatures are going to continue to rise, then it's going to be interesting to see what happens to Siberia, the eastern part of Russia that is almost uninhabitable now, but might be inhabitable and might be agricultural land at some place. Same thing with Canada. Those guys have got to have mixed feelings about the whole concept of global warming, because in one sense, it's bad for a lot of things that are established, but it might open up an awful lot of land for these guys. So anyhow, that's a longer term digression, yes. but something that's interesting from the point of view of these big cold countries.
Oh, it's very true. Well, I don't know if we have no idea why it's happening. If it's happening, it's stopped happening for the past 17 years. Supposedly.
Yeah,
they've been rigging the data, whole bunch of things. Jerry, if you're out there listening, I'm not buying that it's all man-induced, and I'll stay in Florida. But hey, if Toronto had weather that it went down to like New York City, 350 miles south, and it only went down to 40 degrees for the most part during the winter, Toronto might be an alternative, an option to live there. But as far as I'm concerned, the place is pretty much unlivable now, with the below zero temperatures being the norm in the winter. So it's like they live there or Buffalo, what's the difference? But, good point, definite digression. And, we've got a lot of issues that we can do something about, rather than worrying about things that we can't do anything about. Probably too late if there is, in fact, man-induced climate change. I mean, we must affect the climate in some way, obviously, but how much, that's really the issue. I think it's probably overall benign, but smarter people than me, maybe even smarter people than the ones running the Federal Reserve, think otherwise. But John, we got like intractable problems here that can't be solved by our political system, and something is going to have to give at some point, right?
Oh, yeah. When you borrow this much money, nothing else works. There's one other indicator that's way more short term, so it's almost actionable, and that is the dumb money movements out there right now. For the past few years, the stock market in the U.S. has been propped up by corporations borrowing really cheaply and then using the proceeds to buy back their own stock. And you can graph the S&P 500 against the amount of new money flowing in via these equity repurchases, and they correlate almost perfectly. So that's one of the big things pushing up the U.S. stock market. But it's starting to moderate. Companies are buying less and less of their own stock right now, which would normally be a sign to start shorting the market. But that money is being replaced to an extent by retail investors opening new accounts at Charles Schwab and places like that, and starting finally to jump into equities. They've been resistant. As recently as 2015, individual investors were net sellers of stock. Now they're aggressive net buyers. So that's a sign that one form of dumb money, corporate treasurers, is being replaced by an even dumber form of money, individual investors. And that's another sign of a market top. And it's obviously it's dangerous to call market tops in this world when the governments of the world are so actively trying to support financial asset prices. But historically, when this happens, we're near the end of the game. So it definitely bears watching. And if it continues in this direction, in other words, if individuals continue to buy equities really aggressively at these all-time record prices, then we've got to be close to the end of the process.
You would think. Hey, well, this is further proof of the greater fool theory, John. You can't have exponential markets without having a greater fool, can you?
Well, somebody's got to step in and buy when the smart money is selling. And a lot of institutions are now getting out of equities, and they're handing that stock off, first of all, to corporations and then to individuals. And that's part of a normal historical pattern. The smart money, which is to say the hedge funds and the major mutual funds and the big clients of the major money center banks, tend to get in early. And then they ride the incipient bull market up until it becomes an old bull market, and then they start selling their stock to other people, and those people tend to be wrong. And this goes on in every cycle. And part of this is because the rich guys have better information because they're clued into what the big banks are doing, and the big banks largely control the government. Mm-hmm. So they know that, for instance, quantitative easing is going to happen, and it's going to pump huge amounts of cash into financial assets, and other things being equal, that'll drive up prices. They get that early on. And retail investors, the little guy, he's shell-shocked from the last bear market and doesn't want anything to do with equities, no matter what the government is doing. And it takes a really long time to come around and think, there's a lot of easy money being made here. Let me jump in. Well, by that time, the hedge funds are happy to sell him their stock. And this is a really sad process because, the retail investors are people who are trying to save for a decent retirement, trying to put their kids through college. In other words, they're doing good things with the money that they would make if they made money in the stock market. But that's not how it usually works. Usually they get in late, get creamed in the subsequent bear market, and then stay out during the subsequent run up when the real good gains could be made that would allow them to live the kind of life they'd like to live. Very frustrating. And a lot of this is government policy. This is basically the rich guys of the world harvesting everybody else, Yeah. And it doesn't have to be that way. We could have a system that is run for Main Street rather than Wall Street. But that's just not how it works now.